Welcome to the deep dive. Have you ever found yourself wondering, how long does a bull market last? It's something that's on a lot of people's minds, especially when the market's been going up and down lately.
Oh, for sure.
People want to know, if this upward trend that we've been seeing, if it's going to keep going or if it's about to take a tumble.
Yeah.
And hopefully today we can find some answers to that question, or at least get closer to understanding it.
Yeah, absolutely.
So by the end of this deep dive, hopefully you'll not only understand, what a bull market is, but you'll also walk away with some really memorable insights, things that you'll actually remember.
Yeah.
Not just some vague, understanding.
Yeah, you want something you can take away.
Yeah. Exactly. Something you can actually apply.
Yeah.
So before we get too far into it, I think it's good to kind of set the stage.
Okay.
What exactly are we talking about when we say bull market?
Well, the kind of standard definition is a 20% rise in stock prices.
Okay.
From a recent low point.
Okay.
But it's more than just numbers, right?
Yeah.
A bull market also signals this period of optimism where investors are like, hey, we think things are going to keep growing.
Okay, so it's like a feeling?
It's a feeling.
As much as a measurable thing.
Yeah, quantifiable thing.
Right, exactly. And, one of the articles we have here, 10 Things You Should Know About Bull Markets, it points out something really interesting. They say the stock market and the economy, they don't always move together.
Yeah.
And that seems kind of counterintuitive, doesn't it?
Yeah, it is. It is. I mean, you think, strong economy equals bull market.
Automatically, yeah.
But you have to remember the stock market's all about expectations.
Mm-hmm.
Investors, they're betting on what they think is going to happen in the future, not just what's happening right now.
So, even if things aren't great at the moment, they could still be...
They could be.
Bullish.
They could be bullish, exactly.
Interesting. Okay, so how does a bull market compare to its, opposite, the bear market?
Right.
Those downturns, they could be a little scary.
Oh, yeah. They can be pretty intense. Think of it like the seasons. You've got spring, summer, fall, winter.
Yeah.
In the market, you've got bull and bear cycles. They're both natural parts of the cycle. Since 1928, the S&P 500 has seen 27 of each.
Wow. So pretty even.
Pretty even, yeah. But here's the really interesting part. The bulls, on average, last a lot longer and bring much bigger rewards.
Okay, well, how much longer are we talking? And how much bigger rewards are we talking?
So on average, since 1928, a bull market has lasted about 2.7 years.
Okay.
With an average gain of 115%.
So more than double your money.
More than double, yeah.
And 2.7 years.
On average, yeah. Bear markets, on the other hand, average less than a year.
Really?
With about a 35% loss.
Wow. So bulls are definitely where it's at. But I'm sure there have been some exceptions to those averages, right?
Oh, absolutely.
Like some crazy long bull markets and maybe some super short ones.
Yeah, so the longest bull market on record ran for over 12 years, from 1987 to 2000, with a gain of 582%.
Oh, my goodness.
But then there was this bull market in 1931. It only lasted 25 days.
Really?
But even that short burst delivered a 27% return.
Wow, so even the short ones can be good. But that makes me think, how do you even know when you're in a bull market?
That's the thing, right?
It feels like you only know when it's already well underway.
You're exactly right. It's one of the big challenges. Even after that 20% rally, the market can backtrack.
Really?
Retest those previous lows. It's like it's trying to shake people off before it really takes off.
I see. So it's tough to know for sure if a bull market is actually, here to stay.
It can be, yeah.
And I bet that makes a lot of people hesitant.
Oh, absolutely.
Like they're waiting for the perfect moment to jump in.
Yeah.
But it sounds like waiting too long could mean missing out on big gains.
It could, yeah. Historically, the first month of a bull market sees an average gain of 13.6%.
Okay.
But if you wait 3 months, that jumps to 25.3%.
So being a little late can really cost you.
It can, yeah.
Okay, so we've established that bull markets can make you money, but do they just go straight up?
No, it's not always a straight line. It's more like a roller coaster with, some exhilarating climbs, but also some dips along the way.
Oh, okay.
And they often go through these distinct phases, which can make them even harder to predict.
Phases, okay.
What are those phases?
Well, one of our sources, the CME group, they describe 2 main phases.
Okay.
The first phase is what we might call the intuitive phase. That's where earnings and stock prices, they both rise together. Okay, so everything's going up.
Everything's going up. Companies are doing well. Investors are confident. It all makes sense.
It's like a feel-good phase.
It is, yeah. It's the feel-good phase.
Right.
But then comes phase 2, and that's where things get a little more complicated.
Uh-oh. Okay. What happens in phase 2?
Well, this is where earnings might actually start to go down, but stock prices, they might keep going up.
Really?
Yeah, it seems counterintuitive, right?
Yeah, totally.
But remember, the market is always looking ahead.
So even if things are slowing down a bit in the present,
Yeah.
investors might still believe in the long-term potential.
Exactly. A great example of this is the bull market in the 1990s. The first phase, where everything's rising, that lasted until about 1997.
Okay.
Then phase 2 took over and ran for the last 3 years.
Wow.
And those 3 years were pretty volatile.
So even though earnings were slowing, the bull kept running.
It did, yeah.
Interesting. Okay, so let's get to the big question. How long does this whole party last? Like, is there an expiration date on a bull market?
You know, unfortunately, there's no set time frame. There's no crystal ball that tells us exactly when things are going to turn. One of our sources, from Charles Schwab, they even compared bull markets to automobiles.
Oh, okay.
They don't expire on a specific date.
Right.
They just kind of experience wear and tear over time. And how well they run really depends on a whole bunch of factors.
So instead of trying to predict the exact end date, it's more about understanding, the conditions that make a bull market run in the first place.
Yeah, exactly. And the good news is, historically, bull markets don't usually just die of old age.
Okay.
There's usually something specific that triggers the end.
Like what?
It could be a recession,
Okay.
a bubble bursting, like the dot-com bubble.
Right.
It could be a global shock.
Like a pandemic.
Like a pandemic, exactly. Or maybe the Fed's interest rate policy is getting too restrictive.
Oh, okay.
Those are the things that can really derail a bull market.
So it's not like we're just sitting here waiting for the clock to run out.
Not really, no.
Okay, well, that's actually kind of reassuring.
It is, yeah.
But let's talk about the bull market that we're in right now.
Okay.
This one's been going for about 2 years now. Are there any signs that it might be, getting tired?
That's a great question.
Any hints that maybe a downturn is on the horizon?
That's something that we're going to dig into right after we hear a word from our sponsor.
We'll be right back with more insights on the lifespan of bull markets, so stay tuned.
So before the break, we were talking about those warning signs.
Yeah.
That this bull market might be getting a little tired.
Right. And I'm really curious to hear what those are. I mean, it has been an impressive run.
It has.
But, 2 years in.
Yeah, it's not exactly a spring chicken anymore.
Exactly. So what are we seeing?
Well, a couple of our sources, especially the analysis from the CME group,
Okay.
they point to a few things that could indicate this bull is, starting to get a little winded.
Okay.
One trend they highlight is falling corporate earnings as a percentage of GDP.
Okay, and what does that mean exactly?
So basically it means that profits aren't keeping pace with the overall economy.
So it's like the engine is starting to sputter a little bit.
Yeah, it's definitely something to keep an eye on.
Okay.
Another factor is that this rally has become increasingly concentrated in large cap stocks. Smaller companies, like those in the Russell 2000, they're lagging behind.
Yeah, Charles Schwab mentioned that too.
They did.
They said it was like the weakest start for the Russell in history.
Wow.
And they attributed it to the fact that we didn't have a recession in 2022.
That's an interesting point.
Yeah.
So, those economic downturns, they often create a reset, allowing for a stronger recovery across different segments of the market.
I see.
So without that reset, small caps might struggle to catch up.
So it's like this bull market is kind of relying on those big companies to keep things going.
A little too much, maybe.
It's getting a little top heavy.
Yeah, that's a good way to put it.
Okay.
There are also a couple of more technical indicators to consider.
Okay.
The CME group mentions widening credit spreads and rising implied volatility as potential warning signs.
I think you might need to explain those.
Of course.
Because I'm not sure everyone knows what those terms mean.
Right, so think of credit spreads like this.
Okay.
It's the extra danger money that investors demand to lend money to companies instead of to the U.S. government, which is super safe.
Right.
So when those spreads widen, it means investors are getting a little nervous.
Okay.
They're starting to sense a storm might be brewing.
So wider spreads could mean trouble ahead.
Potentially, yeah.
For companies and then for the market.
Exactly.
Okay, got it.
And implied volatility.
Yeah.
It's basically the market's expectation of future price swings.
Okay.
Think of it like, choppy waters versus calm seas.
Right.
Higher implied volatility means investors are expecting more turbulence.
Okay.
And that can make them hesitant to jump in.
So I've got falling earnings, a narrow rally, widening spreads, and rising volatility.
Yeah.
It sounds like a lot of red flags.
It does, doesn't it?
Are we about to hit the panic button?
Not necessarily, no. It's important to remember that none of these are guarantees.
Okay.
They're more like flashing yellow lights.
Okay.
Telling us to proceed with caution.
Right.
But not necessarily to slam on the brakes.
So it's not time to sell everything.
No.
But maybe a good time to, check our portfolios,
Yeah.
make sure we're comfortable with the level of risk.
Exactly. And it's a good reminder that diversification is so important.
Oh, absolutely.
Especially as a bull market gets older.
So spread your investments around.
Exactly. Stocks, bonds, real estate, maybe even some alternative investments. That can help you ride out those market storms.
Yeah, that's good advice.
Yeah.
So if we can't predict when this bull market is going to end,
Right.
what should we, as investors, be focusing on?
Well, one of our sources from money.com, they put it really well.
Go.
Trying to guess when the bull will end is like trying to predict when lightning will strike.
Okay, so don't even try.
Don't even try. It's basically impossible.
It's a recipe for frustration.
Oh, yeah, and probably disappointment.
Yeah, I can imagine.
So instead of playing that guessing game,
Yeah.
focus on the things you can control.
Yeah.
Your long-term investment strategy,
Right.
your personal financial goals.
So, are you saving for retirement?
Exactly. A down payment on a house, your kids' education.
Yeah.
When you know your why,
Yeah.
it's easier to stay focused
Right.
and not get sidetracked by every little bump in the road.
Yeah, that makes sense. It's about keeping your eyes on the prize,
Exactly.
not getting distracted by every little thing.
Right.
Money.com also said something else that I thought was important. They said, stay invested.
Yeah. Don't let fear or uncertainty keep you on the sidelines. Because history has shown again and again that the biggest losses often come from missing out on the market's best days.
Okay, so don't try to time it.
Don't try to time it.
Just stay in.
Stay in the game.
And of course, we can't talk about market ups and downs
Right.
without mentioning diversification.
Absolutely. It's such a fundamental principle of investing.
Especially in a bull market like this one.
It's key to smoothing out the ride.
Okay.
And reducing your overall risk.
Right.
A well-diversified portfolio,
Yeah.
it helps you stay balanced
Hmm.
and weather those inevitable storms.
Okay, so we've covered a lot of ground here.
We have.
We've defined what a bull market is compared to a bear market.
Right.
Explored those different phases.
Yeah.
Even identified some warning signs
We did.
that this particular bull might be getting a little long in the tooth.
A little long in the tooth, that's right.
But before we wrap up,
Yeah.
I think it'd be really interesting to hear what some of the big names on Wall Street are saying.
Okay.
Are they bullish? Are they bearish? Where do they stand?
Yeah, let's get some of those expert opinions.
Let's do it.
Well, interestingly, both JP Morgan and Charles Schwab seem to think this bull market still has some room to run.
Really?
Yeah.
Okay, I'm intrigued. What are they seeing?
Well, JP Morgan highlights the role of innovation.
Okay.
Specifically, the rise of artificial intelligence.
Oh, AI.
As a key driver of this bull market.
Okay.
They believe it's a transformative force
It is.
that's fueling corporate profits
Mhm.
and
Yeah.
creating all these new opportunities.
Yeah, AI is impacting every industry these days.
It really is. It's everywhere you look.
It's amazing.
And JP Morgan, they draw a really interesting parallel
Okay.
between the current environment in the mid-1990s,
Okay.
when the internet was just starting to take off. They point out that back then, the Fed also managed to achieve a soft landing, meaning they slowed down the economy without causing a recession.
Right, right.
So could we be seeing a similar scenario play out now with AI as that driving force?
That's a really interesting question.
It is, isn't it?
So what about Charles Schwab? What's their take?
They're feeling bullish as well.
Okay.
They point out that despite some of those weaknesses we talked about,
Yeah.
this bull market is still relatively young
Okay.
compared to historical averages.
Right.
And they're particularly encouraged by the broadening participation
Okay.
across different sectors.
Yeah, they did mention that the financial sector has been doing really well.
Right. They said it's trailing only tech in the past year.
Yeah, that's a good sign.
It is. It means the rally isn't just dependent on a handful of, high-flying tech stocks,
Right.
more sectors are getting in on the action.
Which is good, right?
Which is generally a good sign, yeah.
For the overall health of the market.
Exactly.
Okay, so both J.P. Morgan and Charles Schwab are feeling pretty optimistic.
It seems that way.
Even though this bull market is, getting a little older.
It is.
But they're not ignoring those potential risks we talked about earlier.
No, they're acknowledging them.
Okay.
But they're not letting fear control their outlook.
Right. It's about having a balanced perspective.
Exactly.
Which is what we should all try to do.
Absolutely.
As investors.
Yeah, it's about staying informed and being prepared for whatever the market throws our way.
That's a great point. I mean, we can't let fear make us miss out on opportunities.
No, that's right.
So let's bring it all together. We started with the question, how long does a bull market last?
We did.
And I feel like we've gone on quite a journey.
We have.
Exploring all the factors that influence its lifespan.
It's a complex topic.
It is. It is.
With a lot of moving parts.
But one of the biggest takeaways for me is that trying to predict the exact end of a bull market is basically a fool's errand.
It's a fool's errand, you're right.
It's impossible to time the market perfectly.
You can't do it.
And I think that's something a lot of people need to hear.
I think so too.
So instead of trying to do that, what's the better approach?
Focus on having a sound long-term investment strategy.
Okay.
One that aligns with your financial goals and your risk tolerance.
And, of course, staying informed.
Always a good idea.
About what's happening in the market.
Absolutely. Knowledge is power.
So it's about focusing on your own financial journey?
Exactly.
Not getting caught up in the hype or the fear for the moment?
That's a great way to put it.
So what's the verdict? Are we riding this bull until it bucks us off?
I'm not going to make any bold predictions. Okay. Remember, no crystal ball.
Right.
But as long as those key drivers of growth remain in place, things like innovation, a healthy economy, supportive monetary policies, there's reason to believe this bull market could continue.
Okay.
But it's important to stay vigilant.
Right. Monitor those warning signs.
Okay.
And adjust your portfolio as needed.
Those are words of wisdom.
Well, I try.
That's a great point to end on.
I think so, too.
But before we sign off, I have one final thought-provoking question.
Okay.
Based on that J.P. Morgan prediction.
Yeah.
They said, if the S&P 500 keeps up a 7% annual return, it could hit 10,000 within a decade.
10,000.
Now, I'm not saying that's guaranteed.
Of course not.
But it is pretty exciting to think about.
It is. It highlights the power of long-term investing.
Yeah.
Riding out those ups and downs and letting the magic of compounding work its wonders.
It's amazing what can happen over time.
It is. It's a reminder that staying invested, even when things are uncertain, can lead to incredible results.
I'm definitely feeling inspired to stay the course.
Good.
And see where this bull market takes us.
Me too.
Well, thank you so much for joining me on this deep dive.
It's been my pleasure.
It's been a really enlightening conversation.
I always enjoy these conversations. Yeah. Exploring these market dynamics and hopefully providing some insights that you can help people make better decisions.
And for anyone listening who wants to learn more about navigating the complexities of the financial world.
It is complex.
It is.
But it doesn't have to be scary.
I highly recommend subscribing to this YouTube channel.
Yes, do that.
And hitting that bell icon.
So you don't miss any of our deep dives.
Exactly. We're always bringing you new content.
We are.
Covering a wide range of topics.
Trying to make finance more accessible.
We're passionate about empowering people.
Absolutely.
With the knowledge and tools they need to take control of their financial future.
It's your money.
And we believe that everyone can achieve their financial goals.
I believe that too.
With the right guidance and a little bit of effort.
It's all about taking that first step.
So join us on this journey of financial discovery.
Let's do it.
And let's build a brighter financial future together.